Good evening, everyone. Time for another member update. This is the 5-minute chart of silver on netdania.com. You can click on the link below. Now, there's a couple of questions that come up here with the move that we've had. And the first one is this a parabolic blow-off? And the second one is going to be, is this a short squeeze? So we're going to try to talk about both of these. Now, the first thing we want to look at is the 1-minute chart, because we have a lot of volume that's come in, and certainly a tremendous amount for after hours. So you can see one of the spikes here is this 140 something thousand spike. But if you look and see where it came in, it actually came on this spike up. So the initial buy spike that we had was right about here with a 80,000 volume, and you can see the volume came in. The volume that cracked it actually is here at 80,000 is when it began to sell off. But then that more volume came in, and we can see more volume coming in now. So they're fighting it out in the after hours. You have to remember that we're in a holiday period, so it's kind of strange. The activity is going on in the East, and we're going to cover that when we do the comparison between the East and the West. But the first question is, technically, is this a parabolic spike? Well, it clearly has the shape of one. Let's go to further out on the 30-minute. That shape looks like a parabolic spike. How do you determine that? Well, the way you determine it is going to be with the candlesticks. So anytime you have a naked candlestick like that, you can see that one. Let me take it off of the lines so I can move it freely here. So when you have a naked candlestick like that, where there's a tremendous amount of change of price, but it doesn't close. It just trades there and doesn't close there. You can see the low price on that candlestick is about 20.47, and then the high price is all the way up at 21.13. So about a 60-cent size in that candle spike. Now let's go out to the daily so I can show you some of these. There aren't a lot, actually. Probably want to go on to the weekly. So you can see some of these here specifically. Let's get some arrows. Specifically these two here, you can see that those two were significant spikes where it went the other way, where it just traded briefly at that price and went the other way. Now this one that we're at currently is almost perfectly aligned with the Bear Stearns 2008 top, and that is very important resistance. You can see we're almost tied with it, not quite there. The other thing I've pointed out is the resistance that's in this area here. You can see that these two areas here and here, we pretty much cleaned them out almost. The big one is going to be this area here, where we still have to test that. Now the next level, of course, is going to be that 26 level, and I said before that we could rapidly move towards 26. It wouldn't surprise me if it was a matter of days where we tested that. So it looks like it is a parabolic spike, but then again, when you begin to get these range expansions, and a range expansion is when it starts to move a much larger percentage on a daily basis than it had been previously. Now you can see here on this spike that we had that took us from about around 17 or so up to about 1830 or something like that. It was followed by a long consolidation phase, a sort of a, let's pull it out, a kind of a pennant formation that we had, and then that was followed by a rally. So we could get that sort of thing where we consolidate and then make another run at it. So it's very tricky when you're trying to figure out whether something is a parabolic spike, because the problem with a parabola is that the curve can always go sharper, and it can seem like it's going straight up, but until you see the next spike, you realize that the last one is really very small. So the other question is going to be, is this a short squeeze? And I'm going to address that in a second, but let me look at the coverage here from Zero Hedge. This is precious metal pandemonium. Silver spikes limit up. Surges as China's FX basket hits record low. Update, silver just exploded above $21, up almost 8%, its biggest single day surge since September 2013. Silver is limit up on the Shanghai Futures Exchange, as gold is also surging back towards its Brexit highs of near 1360. So let's clear off the chart here and do a comparison. One of the charts that they put on Zero Hedge is the gold-silver ratio, and that is obviously, with this type of move, is rapidly tightening. But let's do the gold-silver cross rate so we can see how much it's moving relatively to gold. Now we know that percentage-wise, just today, it's a big move. So you can see on the daily chart, you can see the catch-up move that we have. Let's get the arrow off here. So you can see that silver rapidly catching up to gold. What does it look like on the weekly? Now with the weekly, you can see that it's a long ways away from gold. Silver needs to trade at about $35 an ounce to effectively have caught up with gold. So there's a long ways to run. So here are the charts here. Here's the Brexit chart, and here's the silver chart with Brexit. You can see that Brexit was the beginning of this parabola, and the limit up chart in Shanghai. All of this is happening as China's currency collapses to a record low since it began being published against a broad basket of majors. As we detailed earlier, extending Friday's gain, silver futures just broke above $20. And gold topped $13.50. So silver is clearly the best asset for this year. There's no question about it. Let's go over to FinViz and pull the futures on that. I like FinViz because it gives you those green ones. So it's not nearly as high as it was. You can see it's only showing 3.84%. So definitely a correction. But you can see from the chart here on FinViz that that's a big move. Actually, a series of big moves. These are daily candlesticks. So you can see $1.50 candlesticks in a row. Now that's something that we saw in 2010, and I want to show you the MACD for the 2010 period when we had that move, to show you that although we're getting a widening of the lines here, I think it's, let's do the monthly. So you can see here we're getting this kind of widening out of the lines that normally indicates a correction phase, where you can see the red line is kind of exploding away from the blue line, although we're below the zero line. But if you do a comparison of the move that happened in 2010, you can see that we had the same sort of formation here with the red and blue line separating, the blue line just not being able to catch up. But what is a comparable place for us? Well, actually, it's going to be right about there, which actually corresponds with the breakout. So you can see, even though we had this tremendous separation between those lines, and this was above the zero line, we're below the zero line, that it really only corresponded with the $20 price. We actually had a doubling from there, and more than a doubling actually. So what does it mean if we break out from the below the zero line and can have a continuation on? Well, we could take out $50. Now, the second question is it going to be a short squeeze? And when will the short squeeze occur? Well, there's two answers to that question. The first answer, I'm going to say, is no. And the reason why is you have to understand what a short squeeze is. So let's just read the Wikipedia definition. A short squeeze is a rapid increase in the price of a stock that occurs when there's a lack of supply and an excess demand for the stock. Short squeezes result when short sellers cover their positions on a stock. This can occur if the price has risen to a point where short sellers must make margin calls, or more loosely, if short sellers simply decide to cut their losses and get out. This may happen in an automated manner. For example, if the short sellers had previously placed stop loss orders with their brokers to prepare for this possibility. Since covering their positions involves buying shares, the short squeeze causes an ever further rise in the stock's price, which in turn may trigger additional margin calls or short covering. Short squeezes are more likely to occur in stocks with small capitalization and small floats, although can involve large stocks and billions of dollars. This happened in 2008. When a short squeeze temporarily drove the shares of Volkswagen on the Xetra DAX from 210 to over 1,000 in less than 2 days, briefly making it the most valuable company in the world. So that's a fairly good definition, but it's not the best, because the real essence of a short squeeze is when you have a overly large short position, and the worst scenario is where the short position actually exceeds the available stock, and that's when you actually have people falling over themselves trying to get the shares that aren't available because more have been shorted. Now, how is that possible? Well, it's not really possible in a honest market, but we don't have honest markets. We have counterfeit stock. So it's quite possible for people to short counterfeit stock, and I've explained before how it works when your stock is held in street name. You can only short stock that's held in street name. So if people take delivery of the shares, take delivery of the certificates, that stock's not available to be shorted. So it is possible, with the dishonesty that we have here and the fraud that we have here, that you can actually short more than is available in the float. That happened, I believe, in overstock.com, and I think Patrick Byrne made mention of that. And that's when you get really a true short squeeze, the type of thing where in this article here, talking about Daniel Drew, who was the one who came up with the saying that Jesse Livermore quoted in his book, The Famous 19th Century Bear, even made up a little ditty about it. He who sells what isn't his'n must buy it back or go to prison. You probably won't go to prison on a sour short, but it might seem like a better option. If a stock with a great deal of short interest soars, it creates a short squeeze. Investors scramble to buy shares at any price to close their short position. That in turn sends the price soaring. The possibility of a short squeeze is one reason some analysts look at a high amount of short interest as a bullish indicator. Now, what they actually did, Drew did, and Livermore did in some of the pools that he operated, was that they would actually create an operation to lock up stock. So if they can induce enough shorts in a stock and also at the same time manage to lock up stock, then if they can cross the point where there are more shares shorted than there are shares available, then what you're looking at there is a potentially infinite price. Because as the shorts fall over themselves to buy back the stock to get out of their position, they run out of stock to buy back, and the price can theoretically go to infinity. Now, the big question is this thing applicable to silver? And I would have to say, on the face of it, the answer is no. And the reason why the answer is no is because the way you buy back your short in silver is by using dollars. It's a dollar market. So there is no way that you can have a limited supply of those dollars that are required to get out of the position. You just simply have to settle in cash and take your cash losses. Now, when you add to the fact that most of us believe that the people behind the silver rigging are most likely the Federal Reserve, the U.S. government, and even more important, probably the Bank of International Settlements and every world power that's out there, these people have the ability to print unlimited amount of dollars. So that is not analogous to a true short squeeze that Daniel Drew or Jesse Livermore were talking about in the stock market, where there just aren't enough shares to buy back. There might not be enough silver, but that doesn't matter because these markets aren't really trading silver. They're trading dollars. Now, that's the reason why this isn't a short squeeze. Now I'm going to show you the reason why this actually may be a short squeeze. So let's look at this site here. This is a very interesting site. This is called Did the System Collapse? And this site kind of reminds me of the Bitcoin site called Fiat Leak, which actually documents the amount of dollars and yuan that are flowing into Bitcoin. Now, it doesn't seem to be showing, let me refresh the page here. It doesn't seem to be showing the, it usually shows the stuff going back and forth. But you can see here what this shows you is the prices of silver and gold in the West and the prices of silver and gold in the East. Oh, okay, so the market is now closed. That's why. Before the market was closed, right before I started the video, you could see little bars going back and forth. And that was the arbitrage. So you can see in the middle of this, it moves these based on how wide the arbitrage is. So obviously this is going to be a percentage. Gold is less worrisome on this scale than silver because silver as a percentage has a bigger arb there. But you can see in the East that silver has a price of 20.50, whereas in the West it has a price of 20.24. That's going to force arbitrage, which means that people are going to sell silver in the East, buy it in the West, and that means it needs to flow physically from the West over to the East. And same thing with gold, although that's not a big difference. So why am I showing this? I'm showing this because this is a way that there can actually be a short squeeze if the East insists that the metal that's sold there be delivered there. If the East, Shanghai specifically, decides that they are only going to accept the physical commodity to take a position in their market, you have to have a certain percentage, whether that's a fraction or whether that's the whole amount or whatever they decide. If they decide that the physical metal is required to take that position, then yes, that can cause a short squeeze between the East and the West. So no, there currently can't be a short squeeze in the West because the thing that is squeezed is actually dollars, which are in an infinite supply, especially to the people who are behind the manipulation, and that is the central banks, who can print an infinity of dollars. there cannot be a short squeeze in the West. But if we're talking about the West and the East, and there's a requirement in the East that the silver be physically delivered there, yes, there can be a short squeeze. And that may be why we're seeing what we're seeing, the beginnings of that. So I wanted to take you over to the buys here. Now, I covered the half-ounce lunar monkey that has appreciated in price, but not that much. This one I want to cover because there's an anomalous pricing problem when you have sites like APMEX, JM Bullion, Provident Metals, Gainesville Coins selling these semi-numies pretty much as numies. You can see that the 2-ounce lunar monkey now is at 57.59, which is a equivalent price of about ounce equivalent price of about $29 or so, 28.50, $29, and that's going to be roughly $8 above spot. Now that's actually compressing. They're not moving this price up as fast as they're moving up some other prices. So I can actually foresee a point where this coin is going to end up being a buy. They have 90 of them. There's also the 1-ounce horse, which is stuck at $39. Now, I've followed that since it came out. I've never seen it below 37. I only bought 20 of them, ended up buying the half-ounce. But the 1-ounce I got for 37, it's at 39. So as these prices increase, it becomes possible that their reaction time is wrong, and coins that were previously too expensive to buy can actually become a reasonable price. Those are the ones we really want to keep an eye on. So to sum it all up, we're staying within those trend lines. You can see we did a bounce off of the primary trend line, even though it's sort of looking like a parabolic move. Actually, I have those drawn on the 5-minute. So you can see this bounce right here is on the trend line, and even more important, the MACD has corrected below the 0 line, is now turning up. So I'm not yet convinced that this parabolic move is over. It looks like it is, but it could move higher, and we're talking, that 26 price. But as far as the short squeeze, no, that can't happen in the West. That's going to happen between the East and the West. But this could be the beginning of that type of squeeze. And we'll talk to you next time.